Hi, welcome to this episode of Talking Tax with Alex. This episode, we're going to talk about tax crimes and criminals. This is the third video in this series. I know I made a couple with multi-part, but I've changed the formatting a little bit so that each one is just contained into one video now. So this is the third time we've done a video in this series. And today, we're going to talk about the series just a little bit. I'll give a summary of the crimes, and then I'm going to spend some time talking about the bold, the foolish, the criminals that I think are the did the most foolish things, and then a couple takeaways from our analysis. Just to let you know, I'll be looking over on this screen for some of the information related to the cases, uh, because I couldn't put all of the information into the slide, or I didn't want to. It gets too long that way. So this is number 3. I got all of these court cases off of the justice.gov website and just kind of looked at where where the DOJ is posting all of their wins against tax criminals. So let's go ahead and get started. So this list is just a summary of a couple that I picked out from the DOJ website. First up is an Alaska businesswoman who is indicted on tax evasion and filing false tax returns. So this businesswoman allegedly, allegedly, I don't have to say allegedly, I'm not an attorney. So from 2014 to 2018, she basically kept 2 sets of books. And in those 2 sets of books, she provided one to her accountant to file taxes and one to, actually run her business. And that business operated from 2007 to 2017, and then the property was burned down in a fire. So all in all, over that 10-year time period of keeping 2 sets of books, she falsely reported her taxes to the tune of $3.2 million. And she provided her tax preparers 2 sets of books, or an alternative set of books. So, there's no way that they could have really known that. She was just committing fraud outright. Next, we have tax attorneys and insurance agents indicted for promoting and selling a fraudulent tax shelter. I thought this one was very interesting. And what is a fraudulent tax shelter, you say? Well, in this case, it was 2 attorneys. They basically called it the gain elimination plan. And it was a tax scheme in which they concealed clients' income from the IRS by fraudulently inflating business expenses through fictitious royalties and management fees. These fictitious royalties and management fees allegedly were paid on paper to a limited partnership largely owned by a charitable organization. So basically, the tax fraud and the tax shelter was that they created a limited partnership owned by a charity, and they ran a bunch of phantom expenses from their other business and created income on this entity owned by a charity. So on top of that, they then had an insurance promoter or insurance agent who used this information to buy insurance, and file claims, or sorry, uh, file requests for policies that were using fraudulent data. So it was kind of a mess, and it's kind of a really big scheme. And not often do we see people busted for outright tax shelters. So I thought this was an interesting one. Most of the time on these kind of series, what I see in the DOJ website is employment, failure to file employment taxes. That's a really common one. Straight up tax evasion, like the Alaska businesswoman, um, and maybe fraudulent preparers claiming undue expenses. So this is a little bit more exotic. I thought this was an interesting case. Next on the list, we have an Ohio gambling business owner sentenced to tax fraud for sentenced for tax fraud conspiracy. So they're sentenced to 3 years in prison, 3 years supervised release. That's what SR is, supervised released, and $938,000 in restitutions. So basically, this taxpayer was running an illegal gambling business and got caught by the IRS. So that's another thing I see a lot on these, a lot of these criminal cases, is that criminals are doing actual crime, like an illegal business or something of the like. There was one last episode with payroll taxes and immigration statuses. And so oftentimes they're doing that and then they get busted for tax crime in conjunction with whatever they're doing. And so in this case, taxpayer did not report more than $2 million of running, basically being a bookie, and has to pay $938,000 back to the IRS. And that's $2 million of income, not tax. So, at the tax rate, that's why it's not the same. So next on the list, this one's a big one, but in Odessa, Texas, a woman pleads guilty to almost $8 million in tax fraud. That's crazy. So she faces a maximum of 3 years in prison, $250,000 per count of fraud, and $8 million of restitution. So this one is crazy to me. I don't. So this taxpayer owned and operated an income tax preparation business from her home, and over the last 2 years, 26 or over 2 years, 2016, 2017, 2018. Sorry, 3 years. Um, she willfully and knowingly helped prepare false tax returns on behalf of the client. She portrayed herself as a knowledgeable and experienced return preparer, leading her clients to believe that she knew how to maximize their deductions and tax refunds. However, she inflated, in some cases, completely fabricated items on her clients' income tax returns, often without their knowledge. She rarely reviewed her clients' income tax returns with them, and um, this basically, without reviewing it with them, this prevented them from identifying false returns. So she basically just said, "Hey, let me do your return. I know how to do all this stuff. I know how to maximize your reduction, or your deductions and your refund." But she was just committing fraud outright, and this is a pretty common theme I'm seeing when I do these kind of series, like tax preparers that um, basically just get a little bit out, well, not a little bit, they go way outside the lines of what's legal, and they start making stuff up because they think that they'll get in the good graces of their clients by getting them a bunch of money back that they don't actually deserve through the tax code. And it's really good to see that they are getting caught and facing repercussions, because it makes actual and legal preparers like myself have value in the market, right? Like everybody, all taxpayers should be legal or should be equal under the law, right? So to see taxpayers or tax preparers that are inflating expenses and falsifying things on returns and getting away with it, it kind of ruins the system for everyone else who's playing by the rules. So that's one of the reasons I do these series too, so that we get to see justice coming to people that are trying to cheat the system. And the last case I wanted to talk about that I pulled up here was a Texas accountant who pleads guilty to embezzling funds from his employer and then filing a false tax return. So basically, the taxpayer just stole money from his employer through embezzlement, just kind of siphoning money out of the business into an account that he controlled, and then didn't file a tax return to report that stolen money. Seeing a common theme here: when someone's doing something illegal, then they make the money off of it, and then they don't pay their taxes on that illegal income. So, it's I mean, again, if you're committing crimes, you're probably not filing taxes and claiming the income anyways. But it's a double whammy once you get caught. I wouldn't recommend doing either, right? So let's talk about brazen. I think the most bold of this list was the tax attorneys and the insurance agent who were indicted for promoting and selling a fraudulent tax shelter. Like I said, I haven't seen many tax shelters in this list in the couple that I've done so far, and I've only been looking for like the last couple months. So, but most of the time it's employment tax issues or just straight up fraud. So, a tax shelter is very interesting. And why is this interesting? So, there are fake transactions to a limited partnership largely owned by a charitable organization. So, they are basically taking money out of a business, claiming an expense, and calling it income into a charitable organization. Charities are not taxed, therefore, they're sheltering income. Now, the fact that it was all fabricated is why this is a tax shelter. If you actually do something like this, but you're actually paying the money and there's an actual business purpose to all this, there's an argument to be made, but they were just fabricating everything. So they inflated fictitious business royalties and management fees. Again, this is why they got busted. They were just making stuff up. So with this scheme, they created tax loss to the IRS for tens of millions of dollars. That's that's a lot, and this is it's a good thing that this shelter got busted up. Um, on top of that, so it wasn't just in the tax world, but they're using false information on insurance applications to create to get policies that were out of whack. And so they're basically using all of these fake financial statements and fraudulent information to then get insurance policies to cover whatever they were doing. And so this led to almost $200 million of insurance in false applications. I'm going to guess it's life insurance, but I'm not really quite sure. It wasn't defined in the article. And then on top of that, they filed false personal tax returns, underreporting income, and inflating expenses. So this is a common theme I see a lot. You know, criminals doing criminal things, and then they don't report the income. Again, I guess it makes sense if you're a criminal. Why would you report your criminal income? But it just adds an extra, an extra slap once you get caught by the IRS, or once you get caught by the DOJ, then the IRS comes and gets you on this as well. So let's talk about the foolish. In my opinion, the most foolish was the Texas accountant who was embezzling funds from his employer and then filing a false tax return. You know, if you're an accountant and you're stealing money from your employer, someone's going to notice eventually. Like, there's just no way that, people just don't get caught. I mean, I'm sure people do it for a while and they don't get caught. And, obviously this guy was doing it for a while and didn't get caught, but he did get caught eventually. So he worked as an accountant and cash manager. He thought he figured out the system. He figured out a loophole, a way to siphon money out of the business. And he did this for 7 years. So for 7 years, he got $700,000. He probably thought he was very clever. And he altered the business's bank statements and then gave those altered statements to the bank reconciliation group. So he thought he figured out the loophole on how to get extra money by falsifying documents and then getting another group in the company to approve those falsified documents. And then finally, he didn't report the income. So again, common theme here: criminals doing criminal things, then they don't report their illegal gains, and it's just that extra slap, that extra double whammy once they get caught for their original crime. So closing thoughts: transactions must be real. That's in relation to the tax shelter. So that tax shelter structure, it's it's a tax shelter, and if you're working in those realms of tax shelters, you need to do everything by the books. And the fact that they're doing fictitious transactions, they're inflating documents, they're providing false information to insurance companies, like, they're doing everything wrong, and those transactions weren't real, and that's why it collapsed. Criminal income is still income, so I was kind of harping on that a lot, but not that anybody here is watching this as a criminal, but it's just a fun fact, I guess, is that if you're making money on illegal activity, you're still required by law to pay taxes on it. I know criminals will not do that; they don't want to pay taxes, but that's it's just another little factoid of the tax law. And then tax avoidance is not tax evasion. You must know the difference. There's a legal way to optimize your taxes. Tax avoidance is using the code in the way that is prescribed to lower your tax liability to what you legally owe. Tax evasion is just straight up not reporting it, using false documents, keeping a separate set of books. That's tax evasion is illegal. Tax avoidance is legal. That's why you need to hire a competent tax preparer. So that's it for this video, this update. If you like this content, please like the video, subscribe to the channel, and comment or email me your thoughts. Thanks. Bye.